Welcome to the Wealth Expedition channel. Have you ever wondered what separates the financial wizards from the rest of us when it comes to investing? How do they consistently make smart decisions that yield impressive returns? Well, today, we're about to unravel the secrets of one of the greatest investment minds of all time. What makes Warren Buffett so successful? What are the strategies that have propelled him to billionaire status? And most importantly, how can you apply these strategies to your own investment journey? Join us as we delve deep into the world of investing and discover how you can invest like a pro, all thanks to the wisdom of Warren Buffett. But before we get started, if you're new here, make sure to hit that subscribe button and ring the notification bell so you never miss our valuable content. All right, let's start uncovering the secrets to Warren Buffett's incredible success. Who is Warren Buffett? Warren Buffett, often dubbed the Oracle of Omaha, stands as a legendary figure in the world of finance. As the esteemed chairman and CEO of Berkshire Hathaway, his name has become synonymous with successful investing. Buffett's remarkable journey has made him one of the wealthiest individuals globally, with an estimated net worth that consistently ranks among the highest. Born on August 30, 1930 in Omaha, Nebraska, Buffett demonstrated his financial acumen from a young age, making his first stock investment at just 11 years old. Over the years, he honed a distinctive investment philosophy characterized by a long-term perspective.
I bought a book in 1949 by a fellow named Ben Graham called The Intelligent Investor. I don't remember what I paid, but aside from what I paid for my 2 marriage licenses, that was the best investment I ever made. It's very important to have the right framework. You need to have an approach to investing that's sound. And Graham's approach is simple, but some people adopt to it, which I did immediately, and most people don't. But if you have the right philosophy, you will find opportunities as you go through the next 20, 30, 40, 50 years. And frankly, you're most likely to find them in periods like 5 years ago when we were having the panic.
A penchant for value investing and a profound understanding of a company's competitive advantage, often referred to as its moat. As a philanthropist and prolific reader, Buffett's wisdom extends far beyond the realm of finance. His insights into wealth accumulation, compounded returns, and the importance of continuous learning have inspired countless individuals worldwide to pursue financial success and personal growth. Investment philosophy. Warren Buffett's remarkable success can be attributed to his unwavering commitment to a set of core investment principles. Let's take a closer look at Buffett's investment philosophy, which has guided his extraordinary career. 1. Long-term perspective. First and foremost, Buffett adopts a long-term perspective. He avoids trying to time the market or chase short-term gains. Instead, he seeks investments that he can hold onto for years, even decades. 2. Value investing. Buffett is a renowned value investor. He actively seeks out undervalued companies with strong fundamentals. His famous saying, "Price is what you pay, value is what you get," encapsulates this philosophy. 3. Moat analysis. Buffett places great emphasis on a company's economic moat. He looks for businesses with a competitive advantage or a protective moat that shields them from competitors. This could be through strong brand recognition, unique products, or dominant market positioning. 4. Quality over quantity. Buffett is selective about his investments. He doesn't make numerous investments. Instead, he focuses on thoroughly researching and understanding the companies he chooses to invest in. Quality always takes precedence over quantity. By adhering to these fundamental principles, Warren Buffett has built a remarkable track record of success in the world of investing, and they serve as valuable lessons for aspiring investors looking to follow in his footsteps. The power of compounding. Warren Buffett's profound understanding of the power of compounding is one of his most potent investment tools. As he famously quipped, "My wealth has come from a combination of living in America, some lucky genes, and compound interest."
For example, communication skills. I tell the students that come that they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%. And, I mean, if you can't communicate, somebody says, it's like winking at a girl in the dark. Nothing happens, basically. And you have to be able to get forth your ideas, and that's relatively easy. I did it myself.
Let's illustrate the incredible impact of compounding with a simple example. Imagine you invest $10,000 at a 10% annual return. After just 1 year, your investment grows to $11,000. But here's where it gets exciting. Over the course of 10 years, your initial $10,000 transforms into $25,937. That's more than double your original investment. Now, fast forward 30 years, and your initial $10,000 has ballooned to a staggering $174,494. This is the magic of compounding. It's not just about the interest on your initial investment. It's also about earning interest on the interest you've already earned. Continuous learning. Another key to Buffett's success is his commitment to continuous learning. He's an avid reader, often spending 80% of his day reading. He recommends books like Poor Charlie's Almanac, The Wit and Wisdom of Charles T. Munger, The Intelligent Investor by Benjamin Graham, Mitek, A Global Success Story, 1981 to 2011 by Jim Healy, and A Few Lessons for Investors and Managers from Warren Buffett, edited by Peter Bevelin. Buffett's love for reading spans various subjects. By broadening your knowledge with such diverse reading, you can make more informed investment decisions. Value investing. When we talk about being a long-term value investor, it's vital to understand what that looks like. Warren Buffett's Berkshire Hathaway has held substantial stakes in iconic companies like Apple, Coca-Cola, and American Express for many years. These investments exemplify his approach. He doesn't buy and sell stocks rapidly, but chooses quality companies to hold onto for the long haul. By focusing on companies with strong fundamentals and enduring competitive advantages, as you embark on your investment journey, take these Buffett-inspired strategies to heart, set your financial goals, and stay dedicated. If you found this video valuable, please give it a thumbs up, share it with your fellow investors, and don't forget to subscribe for more insightful content.